Welcome to today's Explainer. We're jumping right into one of the absolute most fascinating corporate earnings reports of the year. If you follow the energy sector, you know that balancing global volatility with bottom-line performance is a pretty complex tightrope walk. And this latest report shows us exactly how ExxonMobil navigates it. We are zeroing in on ExxonMobil's second quarter of 2026, and wow, they navigated some serious global unrest and shifting market dynamics to deliver some incredibly resilient results. This isn't just your run-of-the-mill financial update, it's a story of how a massive global portfolio responds to real-time, real-world pressures. Let's talk numbers. $14.5 billion. That is their U.S. GAAP earnings for just one single quarter. To really wrap your head around the momentum there, that figure is up $10.3 billion from the first quarter of the year. It's an immense leap, and it absolutely demands that we look under the hood to see exactly how that kind of quarter-over-quarter jump was built. So here's our roadmap for this explainer. We're going to hit the Q2 financial highlights, look at their execution amidst disruption, break down the business segments, check out cash flow and shareholder returns, and finally peek at their future outlook.
All right, Section 1, Q2 financial highlights. Let's look at the big numbers.
The sheer scale of the growth from Q1 to Q2 is just wild. Earnings made a massive leap, pushing earnings per share from exactly $1 in Q1 all the way up to $3.48 in Q2. But the absolute standout metric here, free cash flow. It skyrocketed from $2.69 billion to $17.2 billion. That is the kind of immediate liquidity that gives a corporation total strategic freedom in how they operate and deploy capital moving forward. Moving right along to Section 2, execution amidst global disruption, or essentially their core strategy. CEO Darren Woods really hit the nail on the head here. He noted that while the second quarter was shaped by disruption, it was defined by execution. And that's really the whole shebang, right? It's fundamentally a story of a corporate giant battling external chaos, like geopolitical shifts and shipping limitations, with this intense, unyielding internal discipline. And a huge piece of that discipline boils down to structural cost savings. Now, for ExxonMobil, we aren't just talking about cutting corners or pausing a project or two. We're talking about a massive, multi-year, $16.3 billion operational overhaul. By deeply integrating their global operations and systematically improving efficiency, they've hit a savings figure that literally surpasses all other independent oil companies combined. That is just huge. You can actually see that internal discipline paying off with some massive physical milestones. Even with significant disruptions in the Middle East, they still managed their highest upstream production in over 2 decades. Out in the Permian Basin, production hit a record of over 1.8 million oil equivalent barrels a day. Toss in a 5th Guyana production vessel setting sail, adding another 250,000 barrels a day of capacity, and record second quarter diesel production. That is a relentless pace of physical execution on a truly global scale. Okay, let's break this down even further in Section 3, breaking down business segments, the true profit engines. Stacking these segments side by side, it's totally clear who the heavy hitter is. Upstream is the absolute powerhouse of this company, pulling in nearly $8 billion by itself this quarter. Energy products isn't slouching either, with a really robust $4.2 billion, thanks largely to those structural cost savings we just talked about, and chemical and specialty products rounded out with a solid $2.8 billion. So why is upstream so dominant? Well, it comes down to laser-focused execution in their most advantaged assets. This was largely driven by that record Permian production we mentioned over in the Americas, plus they didn't have the operational headaches in Kazakhstan that they've dealt with previously. By leaning heavily on their integrated portfolio, they basically offset the very real geopolitical turbulence happening elsewhere and moved product exactly where the market demanded it. Next up, Section 4, cash flow and shareholder returns. Basically, what does this massive execution mean for the investors? $23.6 billion. That is the total cash flow they generated from operating activities for the quarter. Because they kept costs down and production up, they built this absolute mountain of operating capital. And a huge chunk of that cash, it is destined directly for distribution to the people holding the stock. They essentially rewarded investors in 2 big ways this quarter, paying out $4.3 billion in dividends and pulling off $5.1 billion in share repurchases. Put those together, and you've got $9.4 billion returned to shareholders in just 3 months. They are quick to point out that this is an industry-leading figure, and honestly, it's pretty easy to see why. Finally, Section 5, future outlook and market risks.
let's navigate what's next.
Because let's face it, past success doesn't guarantee a smooth ride tomorrow. ExxonMobil has some major external hurdles to dodge to keep this earnings engine running. We're talking geopolitical unrest and shipping disruptions, unpredictable shifts in global supply and demand, changing regulations and taxes, and of course, the ongoing development of alternative energy technologies. Navigating these complex, real-world realities requires a constant, forward-looking strategy.
But make no mistake, they are definitely not retreating in the face of those risks. In fact, they are aggressively putting their capital to work. Their planned investments for 2026 are actually 20% higher than their closest international competitor. They're firmly committed to doubling down on their strategy of growing their advantaged assets and high-value products, betting big on their ability to lead as the markets evolve. Which leaves us with one really fascinating final thought. As global energy demands continue to shift and as transition policies speed up, can ExxonMobil's incredible operational execution actually continue to outpace global disruption? Is this kind of financial resilience a permanent structural advantage built right into their DNA? Or is it just a temporary high watermark in a highly volatile era? Well, that is the ultimate question the market's going to have to decide. Thanks so much for hanging out with me for today's Explainer. I hope this helped bring these numbers and strategies into much clearer focus for you.